The second quarter was another very volatile period. We started the quarter with Trump's so-called Liberation Day, where he announced large tariffs on countries with trading surpluses with the US. These turned out to be much, much larger and widespread than the market had been anticipating, and we saw a dramatic fall in markets. As he retreated on those, we saw a recovery, and over the whole quarter, equity markets were up around 5%. The other big event in markets has been budget deficits. In the US, we had the One Big Beautiful Bill Act from President Trump, which looked to extend tax cuts. And in the UK, we had a U-turn on welfare cuts, which will add about £5 billion to the UK budget deficit. Budget deficits have been going up in many markets, and this is causing pressure for bonds, particularly longer dated bonds, because that additional supply will need financing. Over the shorter term, the short duration bonds, we've seen interest rates come a little bit lower as inflation has proved to be more benign. But then those longer dated yields have been rising as the market worries about how these budget deficits are going to be financed. The 2045 fund, which is for a member who's about 20 years away from retirement, returned over 8% over the 1-year period and a similar amount over 5 years. Both of those figures are comfortably ahead of CPI plus 3 over the respective time periods. The 2025 fund, which is for a member who is very close to retirement, returned over 7% in the last 12 months and over 5% over 5 years. We benchmark that fund against CPI, and again, those returns are in excess of that performance hurdle. Looking ahead, we will be keeping a close eye on the US economy. The Liberation Day tariffs were postponed until the 9th of July. We've just had an extension of those until the 1st of August for most countries. And so we'll be waiting to see where those tariff rates eventually settle. We're keeping a close eye on the state of the economy in the US, where there are mixed signs as to how strong the economy really is, the impact that all these concerns about the tariffs and impact on business spending is really having on the labour market and business capex plans. And in the UK, we will be keeping a close eye on how the autumn statement might unfold. The UK government has a much bigger hole in its finances to fill than it was anticipating, and so the speculation will be rife about where they are going to look for either savings or what taxes they might choose to increase. At Nest, we will be publishing our Responsible Investment Report and our TCFD report, and we're hoping to reach decisions on our search for a US loans manager and our final timber investment.